I'm gonna have to switch to Reddit on my phone because, as usual, I think it hates the Brave browser. I'm gonna have to figure something else out with that.
Yeah, we could test that with you some other time. And for those other folks who have their hands raised, last time we did bring up, I think it was like Crypto Lawyer, I forget his name, and that was pretty good. We may bring some folks up again this time, but not for this part of the segment. So once you let us know once you're good to go, Jared, and then we'll have Tom kick it off.
All right.
Well, he's doing that. So this past week, guys, I hit a big milestone. I'm officially 39. For those who didn't know, yes, I am a boomer.
Official.
Yeah, it's official. Last year in my 30s, and then I really can't pretend that I'm not middle-aged.
All right, I have joined from another account on my phone. I've got my hand up. If you don't mind popping me up there.
Yes, sir. Let's get you up. Well, I think, Tom, it's over to you, sir.
All right. Recording up. Welcome back to the We Are CC podcast. Thank you, everyone, for joining us again for episode 23. I'm Tom Crown. I used to love Bitcoin, but it's too high in fat and cholesterol, so I switched to Litecoin. I didn't even see that. I'm joined by Poppy, who writes the best jokes. Discovered this one crazy way to double your money. Just fold it and put it in your pocket. We also have with us a special guest, Jared Woodard from the RCC Tezos community. He is the representative that made a small fortune by investing in a large fortune in Bitcoin last year. As always, you can find us on weareccpodcast.buzzsprout.com for our previous podcast episodes. Check us out. Poppy, what are we talking about today?
Well, the first thing is just how much I love putting you in the hot seat with these intros. I love because your reaction's so genuine. You're not expecting how how awful these jokes are. Yeah, I mean this week for sure. The Bears are sweating a little bit. My favorite thing to do in the past couple of weeks was, as I skimmed through Twitter and Reddit, is seeing the folks that still, standing on the sidelines saying, "I refuse to buy in until I see ETH at like $500 or less, or I see Bitcoin at 10K or less." And I'm not going to rule out that's certainly not impossible. But to have sat out the past month and still be kind of flexing that like, I don't know, man. I'm glad to have been DCAing the past few months, and it feels pretty good right now. I don't know about you guys.
Yeah, it's not the most sexy way to approach, let's say, crypto in general, but I think by far the most successful is the slow DCA method. I feel like I've said this so many times that it's lost all meaning, but anyone who started DCAing, unfortunately, I mean, honestly, even if you started DCAing at the height, of 2021, if you continued that, you're likely still in a good position. If you bought all in at the top and now you're waiting for the bottom, I got some bad news for you.
Yeah, for myself, I'm just getting back into trading a bit more. I've made a couple trades that were okay. And I've been out of the loop for a while. I got out of trading, made some good money back in 2016, 2017, focused on like a non-crypto career, and I'm full crypto back in my career, and I'm like, there's so much information I'm aware of, I might as well get back into trading.
Yeah, even if just for something to do, as long as you're doing it safely.
Well, it's like, okay, so I work in a couple communities, and it's like, okay, I follow the price, I follow what's going on. I know like the news when it's about to hit. I'm like, I might as well be taking advantage of this.
Yeah, actually, I work in the Web3 space and in just a normal day job I have. And even if I try not to trade a lot, it's just like inevitable for me that I just end up taking trades anyways. It's just hard to resist. And maybe it's I don't think I'm a gambler, but maybe all of us really at heart are kind of gamblers.
I think you could trade without gambling. And that, for me, that's what I really want to find is that level. I mean, don't get me wrong, there's always some level of risk to it, but when you feel like you're just, tossing dice, that's personally, that's what I'm ready to back off.
Mm-hmm. Yeah. And really, gambling is such a negative word. What is gambling really? Anything with a risk and anything that also has a reward. And then successful gambling is just identifying both of those assets. So is it all gambling? Yeah, of course. In a way, there is no guarantees, but that's safe risk management. That's the important part is that's knowing what you have to lose.
I gotta push back on that. I definitely think there is such a thing as there's an Aristotelian mean. There's a line where you're not gambling anymore. It's reasonable. And even then, yes, there's some measure of risk. And I don't think it means that just because there's any level of risk, it's necessarily, some degree of gambling. I think there is, yeah.
Well, you just spend 5 minutes in the RCC Discord in the TA channel. There's so many gamblers.
So of course, the crypto space is replete with gambling, and number go up, and people that have no clue what they're doing, and people are taking advantage of it.
Yeah.
There's a difference between pulling the lever at the slot machine and being, I don't know, like a trained, studied Texas Hold'em player, right? There's different levels of gambling.
Yeah.
I absolutely agree. Tom, I don't know that you know this. We've chatted a bit, or you and I haven't chatted a bit, but I've chatted with Poppy. My primary career for over a decade was in casinos, and
really,
yeah. And so what I learned as a poker dealer, and what I learned from that was,
you're a trader.
Well, no. As a poker dealer, I wanted to be the poker dealer. I sure as hell didn't want to be the player. And no offense to anyone that wants to play. It's just I would rather make my reliable money every day. And I see some players come and go. They're like, they can make $2,000 in a day or some, $1,000 a day in a, somewhat reliable basis. But I'm like, no, I don't want to learn to be a poker player that bad.
You got to be the house. That's a rare setting, and that's the difference, I think, between, like I said, pulling the kind of lever gambling or scratching, scratches or something, is when you're trading, you actually can be the house. Now, you don't get to decide where price goes, but you get to decide when you bet, how much you want to bet, like you get to pick, whereas in the casino, you don't get to pick those odds. Those odds are already determined.
I've got to share this with you. I love sharing this story to give people kind of a glimpse into the casino gambling world. So I worked for I think it doesn't matter. It was a Harris Cherokee Casino. Actually, yeah, really big operation. And I was going through manager training, and this was in North Carolina. And it was like, you wouldn't think that there's this big active casino in the mountains of North Carolina, but it's this little city tucked away in the mountains, and you get people from all around the world that go there. Anyways, long story short, I'm in manager training. We had just had our biggest weekend of the year, which is this time in the middle of summer. And they were going over the numbers we did for that. And I won't go into the specific numbers for it, but it was orders of magnitude which department made more money over that weekend. And I'm sure you guys can guess, which one do you think made absolutely the most money? We have table games like blackjack, yada yada, poker, and then you've got slots. Which department do you think made the most money?
I have no idea. I knew nothing about casinos.
Slot machines blew away absolutely everything.
That blows my mind.
We're in the middle, and now the poker room, over those 2 days, made in the hundreds of thousands of dollars. And the other ones were way more.
Wow.
And I think what I equated that to was that it's so much easier to walk in. You don't have to think. It requires no learning about what you're doing to just come in and pull a lever, and then now the table games take a little more thinking, a little more effort in there. And poker requires way more effort as a player.
You can actually impact your odds. as opposed
Absolutely. To
the
me, like
spinning
you
numbers.
can, depending on how you approach it, you can turn poker into not as much of a gambling
Mhm.
situation, realistically, over a long enough timeline. If you're very diligent, you do it just right, you know. But it takes a
I agree with
whole
that.
lot more effort. And so I would apply that principle to your trading strategy. If you're like rolling the dice and you're just kind of going on whatever hype news hits your feed and things like that, and you're not really doing your homework, if you're putting the effort in there, you've got a way more of a chance of doing better in the long term. If it feels like an extra job, you actually probably have more of a chance of doing better. Does that make sense?
That's a good analogy, because active trading, when I have time, it is a job. Investing in itself doesn't have to be, right. If I have a long-term focus for the thing I'm chasing,
it shouldn't be then.
But if I'm like day trading and I'm doing it right, that's a lot of work. You can't just go in, hit that 100x and let it rip and just walk away, man.
Yep. And now there are those people that just kind of walk in, they roll the dice once, they pull the slot machine once, and it blows the hell up for them.
Unless you're Sato.
Yeah.
I just had a funny thought. I always recommend people want to jump into trading, try paper trading. Don't risk any money. Just see, if you think you can do this, go do it with imaginary money. And if you can do it, then okay, go use your money if you want. I just had this weird thought about, imagine like a paper trading slot machine. How many people do you think would use slot machines if like they could paper trade test it? It's like, I literally never win. I just over time just mathematically lose money. I wonder if that would turn people off or not.
It might. Yeah, I don't know. Something in the just human drive to gamble. I think everyone dreams of the easy money and thinks it could be them. It would be nice, but very few people. So let's move off the gambling. Although I do enjoy the topic.
Yeah, that was fun.
Yeah, I didn't know you worked for. I forgot you worked for a casino. I think we'll have to come back to that sometime. So. Sure. Things right now on the macro are actually super interesting, right? So Tom Crown, I know you probably talked about this 17 times this week. Do you want to kind of recap what we saw this week?
Oh my God. It's wild. It's wild. My YouTube channel, Tom Crown, little shameless self-promotion. I've been live streaming the FOMC meetings for, I want to say, about 2 years now. And I'll tell you something. They were not really exciting, nor did people really tune into them 2 years ago. And now they are blowing up. Like every month, it's my biggest stream and 2,000 plus viewers. The average person is now becoming very aware of not just, I guess it is inflation, but also what the Fed's doing, what's going on behind fiscal policy. And that's a huge change that I am not familiar with. It's blowing me away. We are in unprecedented times.
Yeah,
I believe it's the number one. That's the number one concern in the 2024 U.S. election at this moment is inflation.
It should be. I mean, it's just so in your face. The other issues are very real, but when you go to pump the gas and you're looking at $5, $6, $7, whatever it may be. It's always going to be there in front of you everywhere you go. There's the signs with the gas. You go to the grocery store, there's the cost. Everything's gone up. It's just it is kind of insanity. I think for those of us lucky enough to have a comfortable income, maybe it's not as much of a stressor, but you got to know a lot of people in a lot of countries and around the world don't necessarily have the income to absorb that extra cost from inflation. And so while we're coming into that midterm election cycle in the U.S. in the coming months, and it's going to be a big topic, it's also going to be kind of a prevailing theme in other places. And I don't see it, obviously the Fed's not doing a great job in the U.S. of bringing it down. And they're being fairly aggressive. I mean, 75 BP hike is that's very not insignificant.
They've been hawkish.
We do have a little bit of reprieve, though. So there's no FOMC next month. And then I know. For you, it's a great.
I'm ruined. I'm ruined.
I love sitting on there. You really should check out Tom's streams on FOMC. They're my favorite ones. Period. Not just because I like Tom.
What is FOMC? Sorry.
Yeah. So is it 7 times a year, Tom? That they.
I honestly thought it was every month. I guess you're right. There's none in August. It's the Federal Open Market Committee. I think that's what it's called. It's basically where Chairman Chirpau addresses kind of the public, and the public then goes and the markets then go and read into what he's saying and speculate for really what's coming in the next months and from a fiscal policy stance. And for a long time, these were just nothing burgers. There was no change. Rates were at like zero. And it started to get interesting once they started cranking up these rate hikes. They're really trying to combat inflation. The Fed, I'll give everyone a little 2-cent take. The Fed's tasked with 2 things, and I may be mistaken, but I believe we're recently tasked with a 3rd thing, and that's managing fiscal policy and unemployment in the U.S. So those are supposed to be their concerns. I think that they've been recently tasked also with income inequality with minorities and genders. Don't quote me on that, but I think that's part of it. And they actually talked about that more in the last meeting than I think they ever have. And so what they're seeing is inflation running away. And their answer to that, their toolkit, is to raise rates. And rates effectively doesn't necessarily immediately affect you and me, but it's what basically money costs. And for a long time, money cost U.S. banks nothing. There's no interest rate. And as they turn it up, money becomes, let's say, more expensive to borrow. And the hope with this is that it combats inflation. So far, I think it's clear to say that the data we have in front of us, it has not. We had the largest CPI numbers come in last month. Everyone's talking about now how, well, that was the top. I'm hard pressed to ever say that was the top or that was the bottom of anything. You know what I mean? I'm going to wait for the data to come in, but I think people are expecting them to relax a little bit. And I guess if there's no meeting next month, there isn't going to be a rate hike next month.
Okay. Yeah,
maybe
in theory. I'm sure that they still could raise it if they want. And the one thing that you referenced, the CPI, that's what they call a consumer price index, and that's how they measure the price or the cost of goods for consumer goods. And they measure it month over month just to see, how it changes. And if it continues to go up, it's a sign that inflation is still rampant. So yeah, a lot of us thought last month that we might see it top out, but clearly we were wrong, because it just kept, inflation just keeps going up.
Well, let me get your guys' opinion. If you're familiar with this, are you guys more like modern monetary theory or more Austrian in your view of economics?
I really don't know.
I'm more of a Bitcoin maximalist when it comes to
so
macro.
No, that sounds like Austrian economists. So modern monetary theory, and I don't want to waste people's time with this geek speak, but it's more like the state issues money, that's what creates money, and the taxation is actually part of what gives it value. Blah blah blah. Therefore, you can keep creating more and more money, and it's not necessarily going to have all this problem. Whereas the Austrian viewpoint would be like, nope, the market decides what money is. That's a social conversation. And when you have the gerrymandering of the state meddling with things, it's only just like you're building up this bigger problem that's going to explode at some point. And so from what I
agree with both.
So from what I was getting with my buddies that spend a lot more time kind of picking this apart than I do, is that and we're starting, like, I remember him talking about this months ago, and we're actually starting to get into it, where it's like we're going to see a time period of actual deflation or practical deflation before you see the like the hyperinflation that could come across,
the stagflation.
Well, it's so at some point this, and again, according to these theories, you do get this radical hyperinflation. That's happened to plenty of currencies in the past when the states just lost control of what they're doing. It happened to the Roman Empire. It happened to all of these. Like, you can only meddle with reality so long that it'll catch up with you. And so that's the theory there. Again, I'm not saying this by any means authoritatively, just this is one perspective.
I've heard that as well
on the world we could see. And I was talking to my buddy. He's like, I wouldn't be surprised to me. It wouldn't surprise me if we saw like $10,000, $8,000 Bitcoin in like December ballpark. And so, just, and again, not saying that, will happen. This, of course, that's just one of the possibilities in the world. I don't know. Like personally for me, I'm like kind of stuck in the middle. I'm like, do I sell some Bitcoin and try to pick it up cheaper and, take that tax hit or whatever? Who knows? I'm still, feeling things out for myself.
I think I'm too young to have I haven't lived through these changes, and maybe there are people out there that have, but I've heard many people who are more focused on Forex or the traditional markets say similar things about kind of contraction of inflation into deflation. I have no idea. I have no idea how that really is going to play out. I think until we see CPI come down, the Fed has really no choice to continue raising rates. What I really think is they have to keep raising rates. Historically, we've seen until they're about 2%, within a 2% range, I think, of CPI. And at the moment, that's not close. So we're either going to have to see CPI come down or rates go up faster. And then you have in the mix, well, what is the U.S. government going to do? Because the Fed is not the U.S. government. And so the U.S. government can come around, and the Fed's doing their thing, and say, we're just going to print $1 billion. And then what? It's like a two-headed dragon.
Well, we're in this weird situation. I know, I don't know about you guys, but in my spheres of the world, people are expecting some weird things in the world, some very interesting times to come. We've never had a more geopolitically tied world at the same time that it seems like markets across the world are destabilizing and big issues are coming across. And so if right now, we're under Pax Americana, essentially, and the US has a lot of influence across the world. Essentially, we've got the world's, backing currency for a lot of things. But now there's also, for the first time in history, this decentralized option that is crypto, Bitcoin, things like that. And so it's really what's going to happen?
Yeah. We have a lot of topics to get through, but I had this chat with someone in Texas, and they were just dead set determined on pinning me into saying that crypto has no tangible value. And I remember the one thing I said was, after a plethora of things that didn't convince him, I was like, if anything, its value is it's simply an alternative. We've never had an alternative. We've always been forced under, whatever it is that's making the money in human history. And this is an alternative that's outside of us, and that's value itself.
Yep. There's this option. I've heard so many anecdotal reports, and you're talking about people getting interested in what the Fed is and what's going on. And my buddy's going to get his crypto taxes done, and the accountant out of the blue is like, "Oh man, I'm really getting into privacy coins and things like that. I'm buying the heck out of them," And it's just someone he met off the street, relatively, Yeah, I definitely think times they are a changing.
They are, and yeah, we're really not getting into that much anymore. But then you're still, you got to think the rising powers across the world, things like competing currencies in China, or how Russia is going to respond, over the next year. There's just a lot of unknowns in the traditional systems, and a lot of things are being tested, to the extreme. So it's not a bad time to maybe be tucking away a little bit of money into Bitcoin, even if, like you're saying, even if you believe that it's going to go lower. I can't see a point where I would pull all my money out of crypto, because my concern would be, some of the things you're talking about. It depends, especially depending on what country I live in. Things like hyperinflation.
Strange enough, I was talking to the buddy I was talking to this about, was saying this is one of those weird times where in the short term it may be a good idea to have dollars. And I'm like, okay, how long? 3 months, 6 months, a month? What do you think? And he's like, that's the hard part to figure out. And so if you do want to play that game, then you've got to be knowing what signals you're watching for and know when to pull out and go into other options.
Cash is always part of a portfolio to begin with. I think people don't always know that or accept that. As I think every professional portfolio has some kind of just flat fiat allocation.
Yeah.
Mine actually
free funds.
anecdotal, despite the US dollar value of my portfolio taking a big old dive since November, technically my Bitcoin value of my portfolio has gone higher than it ever has, simply because my cash position is worth more BTC, if that makes sense.
That makes sense.
Yeah.
It's pretty spicy.
Mm-hmm. So that's where things are. I think what I'm going to be looking for in the coming months, going into the midterms, we know again, going to the U.S. economy and the U.S. fiat, the dollar obviously is the predominant currency globally. So this is why U.S. elections and politics, unfortunately, do matter to the rest of the world, right? Going towards those midterm elections in Q4, I think that we're going to see politicians trying to stir up some positive sentiment around the economy. Mm-hmm. And that is
if they want to win.
Yeah. And one of the things I posted, I think I put it on Twitter, but it was like one of my game theories here is with that FOMC paused with the election cycle coming up, and that hopefully, from politicians, they're going to spin that positive sentiment. And with many indicators in the past month and a half for Bitcoin kind of indicating, hey, under normal conditions, this is a floor and the price should respect that. That's not to say that under these conditions it will continue to do so, but I feel like we have potentially a couple months of upside. Again, potential, not financial advice, but that's kind of what I'm watching. You guys feeling something similar?
So in my gut, I kind of agree with the same thing, where we're going to see a couple of these could be bull traps. I don't know. I have no clue which way it's ultimately going to go, but I could see this kind of middling ground of things wobbling up and down. And so I could definitely see that.
I can't believe we haven't already. It's, so someone who's watched Bitcoin's chart, I don't know, all day, every day for years and years and years. What out of the last 9 months, we've had 2 very small green monthly candles. We've seen like kind of unprecedentedly small retracements. And so it would be weirder to me to see it continue to just kind of free fall than it would to return to some kind of high where people are excited again and the bull run's back on. And like, that's when we get hammered again. We haven't seen that. It's really been pretty much just down and sideways and down and sideways.
Yeah. I don't know about that, because we are at like, again, like it's a weird time in the world. Like at any given time for like the history of Bitcoin, there was some weird drama, some good news, some bad news. China's regulating it. It's not anymore. All these kinds of things. We're at a time where like globally, we're a global society at this point, and we're all kind of watching for what's going to be this weird thing that comes across. And like people have been prepping for years, just anticipating some crazy thing coming across. And so I could see part of that hesitation and the knockings on the door. Every which way, someone from the US is like, we're going to regulate crypto now. And like, that's going to have people watching and being pretty cautious, in my opinion.
I guess, I can see your point, but I my gut feels the same way yours does, Tom. Watching altcoins, watching ETH, watching the rest of the market kind of take off without Bitcoin. In a way, it's an interesting thing. I wouldn't necessarily call it an altcoin cycle, but there's no doubt that a lot of alts have grossly outperformed Bitcoin since we tapped 17K.
Yeah, a little echo there, but right now we've seen that. But I think we also need to keep in mind is right now we've seen some really crazy moves. Like Ethereum Classic is up like 50% in the last 2 days, something crazy. We're seeing these things pop off, but then if you zoom out a little more, you see, they also lost 99% from their highs. And that goes back to what I was saying about Bitcoin, is to see them move back up a little bit is not a crazy concept. We dead cat bounce, if you want to call it. Of course, there's no way to know if that's what this is. But after losing so much, I like to think about it kind of just from a trader's perspective or a market maker's perspective, is things start going down, people open short positions. Eventually, they take profit, right? So price keeps going down and keeps going down. They take profit. That's essentially a buy. That's effectively a market buy order. That pushes price up. Other shorts do the same, and it's like a liquidating, cascading effect of pushing the market up. And I think that's what dead cat bounces pretty much are, is when markets are overshorted, and to clear out those shorts, we see price bounce back up. And I think it's definitely too early to get excited. I'd like to see those CPI numbers. I'm bummed there's no Fed meeting next month, not just personally, but they just started hammering them about recession, and we just changed the definition of recession, I believe, the United States for that. That was a classy move. That was just classy.
Yeah, it's not the first time. But yeah, it is.
I identify as a bull market. My pronoun.
Let's go. Let's do it. So yeah, I guess let's go into the next thing, which is the Coinbase insider trading. So this is significant. This is significant for a few reasons, but the main reason is that this is the first time I believe that the SEC has charged someone with insider trading in crypto. And my favorite part of this is seeing the list of tokens that they listed, and I recognized one of them. I'm like, they picked, pardon the language, but they picked some epic shit coins to do the insider trading on. I'm like, I really
do they have the resources? Do they even have the resources to tackle this? Because you ask me as a Bitcoin maximalist, I think 99% of the space is a security. Or we're talking about insider trading, but that's almost the same concept of do they even have the expertise to go about this? Eventually they will, certainly, but right now, I don't know. And maybe that list of coins kind of reflects that. It's like,
well, you're right. Actually, you weren't wrong at all. They have two suits going on. The second one is to say that these are securities, and they had a 38-page analysis on why it meets that definition. Now, what makes this uncomfortable is that this is basically the SEC kind of trying to regulate or to decide policy through the courts. And this is something that a lot of people don't look at favorably because it's not really well thought out. It's kind of like bringing a hammer, and just kind of hammering retail traders down and saying, well, for the sake of this trial, sure, they're securities, which means everything else is going to be security now.
Well, and it's regulation through enforcement. Forever, everyone's been going to the SEC and saying, what do we need to do? How do we need to do it? What's going on? Give us some clarity. And they've been dragging their feet.
And then no. Just guess.
Precisely.
I love that Coinbase actually tried to play nice, right? Do you remember it was last year that they went to the SEC and they made a very respectful appearance? They met with them. They're like, hey, what do we got to do? And SEC was like, well, I think we're just going to sue you on some stuff. Remember, that's when they roll back their interest that they were going to offer on. I don't remember what it was for. Maybe it was just for stable coins. Who knows? But
yeah, it was APY on USDC or something, and they freaked out.
Yeah, I'm sure it has nothing to do with banks. Their banker friends getting upset about it,
and bond treasury, treasury returns being kind of outshined. There'd be no reason to buy them.
Yeah,
they were shaking in their boots almost as bad as when Facebook said they were going to launch crypto.
Oh yeah. Yeah, jokes.
No.
The only people on Facebook now are the boomers anyway. So.
Yeah, right.
As a boomer on Facebook, I can say that's very, very true. And it amazes me how it still exists. The only reason I'm there is to keep in touch with my boomer friends I can't convince to go anywhere else.
Yeah, but really the SEC to me has done a disappointing job. I've tagged them quite a few times on, I keep getting that weird echo. I've tagged them a few times on Twitter, even with kind of disparaging comments, but I don't see any reason to be shy about it. I really, truly think that they are intentionally dragging this out, that they're intentionally kind of stonewalling progress within the space. And
absolutely agree. It's entirely malicious. And when people say well, what is, you see the promise of what a sovereign money can do for people that, politicians can't regulate. And they say, well, you think they're just going to sit back and let that happen? This is an example of them maliciously trying to undermine it, because what you do is you sit back and your regulations screw screw things up already, and then they leave it in a gray area. And then people in the market, of course, people in the marketplace, like no one's invested like this. They're going to try stupid things and learn the hard way. And then you come in and say, oh, look at all these billions of dollars that have been lost because of your haphazard trading. We need to regulate now. And so it was intentional. Like all of this, it's totally by the book.
And I think it's intentional. And it's also, like I said, just like kind of like whimsical in the fact of they can't have the resources prepared for this, like the expertise that would be required. Like they're definitely building on it, working on it, but like they can't be there. They don't have the like the Forex experts that they have for monetary policy or fiscal policy. They really can't. And I think I'll speak for myself as someone who's been in the space. Insider trading, that has not really been a secret. I think that we do need regulation, and that sounds weird coming from me. I mean, look at Celsius. We need regulation in this space when it comes to centralized entities. We don't want them acting, just however they want, taking on these crazy risks and not even disclosing these risks. I think that's good because we don't want that to continue happening. At the end of the day, nothing they can do changes the Bitcoin network. The Bitcoin network cannot be regulated. They can mess with Coinbase, but they can't mess with Bitcoin. And that's the destiny that since day one, the cypherpunks were waiting for. It's like eventually they're going to come after this. Eventually they're going to try to stop it. And when they can't is when we win.
All right, Tom, we're going to have to, I don't want to sidetrack us too much. I know we need to get to these topics, but you and I got to have our like Bitcoin versus the rest of the coins in the world conversation at some point.
Right. I'm cool with other coins. Like I'm not a hater. I'm not a hater of other coins.
Like you can't wish like regulation in for the rest of the market and then be like, but we're all good. It's like, look, you're helping crypto out or you're not. You're part of the
I agree. Hey, I'm rooting for Ripple in the SEC case. Like I'm rooting for, and I don't like, and I'll say it, I'm not an XRP fan. Like I'm rooting for them. Like I am a different kind of maximalist, but that's crypto, man. I'm a decentralized maximalist.
To me, like
that's really what it is.
Of crypto that matters to me is the degree to which it cannot be regulated. That's all I care about.
That's similar to decentralized. Those are not quite the same word, but I'd say they're synonyms.
It's practically the thing I care about, personally.
Same page.
Yep.
Yeah. I'm with you guys.
Sorry, Poppy, we're ruining your topics.
No, this is good. This is what we're here. This is what we're here to do. And I agree 100%. You do need some regulation. In fact, we could even skip down. We were going to talk about that. So the reason that I believe we need regulation is because of stuff like Voyager, Celsius, 3AC. How many tens of billions of dollars did they lose because they were aping into stuff? I mean, it's just unbelievable.
So irresponsible.
Here's my argument against regulation. It's like, okay, so we have people got to be not the brightest bulbs in the world to be throwing money at some like Three Arrows Capital and things like that. And so we're relying on them to pick people that have this special power in society to go and meddle with things too. It's like if they can't invest wisely, they're not going to be able to pick representatives wisely either. And people have to learn to be responsible for their choices.
Agreed.
I think over a certain size that maybe that loses some validity, right? If you're basically these entities were kind of acting like a bank, right? And if you're going to be offering banking services as a centralized entity, I do feel differently about DeFi. I work in DeFi, I support DeFi, and most of my investments the past cycle have been through DeFi, not through centralized exchanges. But stuff like Voyager, Celsius, I mean, they're just damaging to the space. If they
can I say this? If it can be regulated, then it will be. Whatever it is in crypto. If it can be, it will be.
Absolutely
that goes back to what we were saying, is there's strength in its resistance to that. But I think that's the value.
But I'm not going to say like I want more regulation. Now it'd be cool to be like at least be clear about what the regulation is.
That is regulation. Just clarity.
Awesome. Yeah.
That's what we need first and foremost. I'm sure that's not what we'll get first, but
exactly.
We get a confusing string of different decisions that are kind of like against each other. And
I agree.
It's going to be fun.
Yeah, the regulatory space in the coming years is going to be interesting. It's probably not going to please anyone, but you have to make a compromise. Essentially, this is a new asset class. stuff like Bitcoin, you're right, can't reasonably be regulated, but there will still be regulation built around it. And, interested to see where that goes. But yeah, so in terms of Celsius, just looking at that, they brought on their former CFO, chief financial officer. They're going to be paying him $100,000 a month to advise on bankruptcy proceedings. But considering that they're down and out, they're in the hole a few $1 billion. I don't know what he thinks he's going to do.
They also today, this is breaking news. Literally, I should make clickbait. Today, I got an email from Celsius. They had some kind of user data leak. Could it get worse? Could they have mismanaged this worse? one of its vendors, Customer Data IO, has been involved in a data breach connected to it. Oh my God, Celsius! I think it was It's pretty obvious now in hindsight that their shit is not together. And what are they going to do? They're going to liquidate their assets. I don't know. It's certainly going to suck. I have some money stuck on there. I knew my risks. I think that's the difference. Is I knew my risks putting money on there, and certainly everyone else did not. The newer you were to the space, the less aware, or the newer you were to even investing, the less to the space, totally not to investing. Yeah. And those people get boned, and that sucks, and that shouldn't happen.
Mm-hmm. It's funny, Ray, that one of the things I've been thinking, so there's a definite desire when you look at these big funds, there's a massive desire for more kind of secondary markets for Bitcoin. And the Bitcoin network up until now hasn't really been favorable to DeFi. And do you think, Tom, that if the Bitcoin network matures to a point where it can reasonably accommodate some dApps and services
when
like
you see in
Ethereum, yeah, right, when it does, but when that time comes, would you consider locking stuff up in there? I mean, you're probably swearing off centralized services at this point, I imagine.
Oh yeah, I went full defense. I withdrew from everything. I have little trading bags. When it comes to contract, like smart contract, blockchain, kind of DeFi, as we say, once that's on the Bitcoin network, would I trust that? Certainly not right away. I am boring and an old person when it comes to crypto. I like to sit back and kind of watch the lemmings go across the bridge first and see what happens.
That is wise for any implementation, any change, any new thing. Let someone else be the guinea pig.
Yep.
Yeah.
And establishes a history of success. Yeah, I'm in. I'll be in. I'm not all in, but go try it out.
Yeah, I've had Bitcoin on other other chains, wrapped Bitcoin, right? But I really prefer to have the real thing, because you do run into some funny issues sometimes with wrap tokens on alternate chains. So yeah, I guess let's switch it up. Let's go to NFTs. Let's talk about GameStop. So we already settled the fact that as of last week, or really as of its first day of existence, GameStop thoroughly stomped out Coinbase's NFT marketplace in terms of volume. Yeah. So
what an epic fail. How did they fail that? Sorry, I'm derailing us again. But how did Coinbase NFT fail so hard?
We've talked about that a couple of times, and I don't know that I have a clear answer. But the biggest thing I noticed is probably one of the more active NFT guys here is I just didn't see it a lot. I saw a lot of people excited, but from Coinbase itself, I didn't see a lot of marketing from them. And they've been putting some stuff out recently, but it feels like too little, too late.
Maybe not integrated properly into their existing sites. Yeah, because I go on to Coinbase, I don't see it, but I have a Coinbase NFT account somewhere. I've just never. I put my profile picture on it and then never went back.
The one single thing I like from Coinbase as a product is their DeFi wallet. Their DeFi wallet is really clean, really easy to use, and I say that as someone that I mostly used MetaMask because it's acceptable, or it's accepted everywhere. But Coinbase is a lot nicer of a UI user experience.
And no one will ever know, though, because no one sees it.
Yeah, probably not.
Check out their they put out a little ad on Twitter not that long ago for their NFT marketplace, and almost got ratioed by Kobe on that, just tearing it apart.
Yeah, I made fun of that one too. It was it's kind of
so
cheesy. I think it was about the degens, right? The video about the degens.
Oh yeah, everyone hated it. I didn't see it.
It wasn't as bad.
Coinbase needs new marketing.
The worst thing I've ever seen, probably ever, was Mark Zuckerberg's sister put out. You remember that video? Was it last year?
Randy?
Early this year? Was that her? She did the singing
Randy?
like Cyndi Lauper style.
Oh, I don't know.
Oh boy, you haven't seen
I saw Randy. I saw Randy in Miami, and that was the day I learned Mark Zuckerberg has a sister.
Yeah, I didn't know he did either, but
I didn't know that. Yeah, no idea. So GameStop did 1.9 million in volume.
They did almost 3 weeks into July. Oh man, I'm sorry. Yeah, that's right. So that's from one collection. So
okay, I was saying it's a little underwhelming.
Yeah, sorry. Their main
more than I don't know. It's a weird time. Their timing was really weird.
Yeah. Well, no one competes with OpenSea at this point. But even then, NFT trading volumes down tremendously this month, like 73% down so far. So we'll see how the month ends. I mean, with the markets picking up, but there's some interesting correlations where, people are watching. Well, if the price of ETH goes down, then the certain NFTs are more accessible, right? Because even if it remains, say, 20 ETH, but the cost is down a lot, then you might be able to buy in. But that's not always true for every collection. So I do know that me personally, I bought into a lot over the past month because of the cheaper ETH. There are certain projects I've been eyeing up that I really wanted to get in on, and I could finally afford to do it.
Interesting. Yeah. I think comparing like GameStop to Coinbase, they've got an opportunity here. I know this seems kind of bearish for the time they're coming into the marketplace, but whereas Coinbase looks like this boomer trying to like appeal to cool kids, GameStop kind of has a grungy like,
hey fellow kids.
Yeah, like GameStop's got this internet feel, like internet culture, in touch with what's going on, especially with like the what was it, the crypto bet stuff, or the oh man, now I'm such a boomer, I'm not even remembering what it was. Where GameStop landed on the map with their stock.
Wall Street bets.
Thank you. Good Lord, I'm bad.
Hey Tom, I'm sending you Randy Zuckerberg's video. Just mute and watch it while I talk, because it's.
Oh God, the thumbnail alone.
No.
The thumbnail alone is so odd to me.
You need to watch it. I think she was trying to channel some Cyndi Lauper, to be honest, but the video is something else.
Okay.
So Jared, the one thing I like about GameStop's odds is that their link to the video gaming industry, which some of the gaming industry doesn't yet realize the value of NFTs. Others do and are making massive investments into it. But I think GameStop's uniquely positioned because it probably has relationships with all of those major companies already. So I just think if like
agree.
Pokemon, for example, like what if they release an official NFT? What if GameStop can get exclusive rights, to do some big event for it or something? That's.
I think the future, like I know from my side of the industry, there's a big push to get gaming in on chain in NFTs with DAOs and things like that, and I think there's a massive opportunity there because I watch artists build up their own communities directly to people. I've been to like Art Basel, big like highfalutin worldwide art shows, and seen people go nuts over this and be able to go directly to their fans, to their audience. Mm-hmm. I see a world for people to for independent game creators to leverage blockchain, leverage DAOs, leverage NFTs, tokens, things like that, to get support for their games, their projects, their ideas. I think I'm very, very bullish on this long term. I think now is a time to make a brain investment on this stuff, and then and maybe DCA into some projects, some L1 projects that you think can leverage this very well.
Yeah. Yeah, actually, there's some interesting stuff coming out in the space. You know, I do think it's super true that we're early, but you can see the writing on the wall when you see companies like, Microsoft, for example. It's eluding me.
They're Minecraft.
Oh, Square Enix, the company that owns Final Fantasy, they sold off one of their big franchises, right? We talked about that a few months ago, so that they could invest that capital into building out NFT metaverse stuff. And then, Minecraft, there was the news last week about NFT worlds that the Minecraft basically banned blockchain and NFT tech within their game.
See, that's bullish to me. And Steam doing the same thing.
Yeah. Absolutely. But on the other hand, Epic Games is like, okay, sure, send it our way.
Uh-huh.
Yeah.
Yep. And it's just you're waiting. It's a smart contract for someone to replace Steam, and if I'm GOG, then I make the play to like, okay, cool. You don't want to do that, like good old games. I'm like, rock on, we'll take it.
GOG should, yeah. Tip
about time something killed Steam. Yeah. That crap still like tries to load up on my computer every day. Like, no, Steam, no.
Yeah, if I was going to show anything in here, this is financial advice. It's instead of Steam, use Microsoft Game Pass. It gives you subscription models way cheaper. You get access to like hundreds or thousands of games. I don't know, for super cheap. And GOG, which gives you copyright DRM free copies of games.
I love GOG.
Both are great. Yeah, alternatives.
I just picked up Unreal Tournament 2004 for like $2 yesterday.
Memories. So one note, speaking of like fun NFTs, I have to give a shout out. I'm not saying buy this, please don't, but I'm going to put my world up. Etherjump was a project that launched, I think, like last week, and it's like a mini Mario Maker. You do these like little pixel worlds that you can like make an obstacle course in. I know Oz and I both got one. So again, don't buy. I didn't buy it because I think it's going to be worth anything. I just thought it was fun. You can actually play in OpenSea though. I thought that was so cool. Like you build your world, you can visit mine in OpenSea and just like try to play through it. So Tom, you're back. You watched the video, didn't you?
I watched as much as I could. Oh my goodness. Dude, I didn't even look at when it was posted. It was probably posted like exactly at the top or something. What's the date on that?
I don't know if that's the original, but I think this was March spring. 3rd. Yeah, spring. So we did have a little bit of a rally then. But
it's not the word.
It's just hard to take the "we're gonna make it" kind of sentiment from the sister of one of the richest men in the world.
Yeah, you're gonna make it, Randy.
Yeah,
you that's definitely for sure. Will. Yeah, if you want me to make it, can you just donate me enough money to cover my losses, and then we'll call it even. So let me see where we got a few minutes and we'll move into questions to Q&A. Speaking of actually Meta, who obviously went very big on the metaverse this past year, bigger than anyone. The parent company of Facebook, they're losing about $1 billion a year. $1 billion a month in their metaverse segment of the company. So revenue.
Didn't they just get antitrusted or not anti-monopoly too?
Oh, who knows?
Something like that.
They may have. Yeah. So that's interesting. But the revenue is up. I mean, if they keep it up, I don't know how long it'll take. Let me see. They're half a billion in revenue, which is actually pretty good when you think about it for the metaverse in its infancy. I don't know what that.
How did they make money? Like, what do they even have a product? I don't understand Facebook / Meta and what's going on. Like, they seem to have gone all in on it.
Mm-hmm.
Yet, where's their product? Where can I go to the Facebook's metaverse?
I think we have a video coming, Tom. Maybe it's for your channel. Maybe we should do a adventure into Meta, into their metaverse, and we can talk
to find it.
Yeah,
sounds good.
Yeah. So, final note, and then let's do the Q&A, but market sentiment. And I saw some posts about this on RCC, and I really think it's interesting. And they were talking about like, hey, remember late last year when, we were throwing parties on our massive mega yachts, and we thought the money would never stop flowing, and basically everything you invested in was going up. How different that is to now. And I think I mentioned at the beginning, I still see people on Twitter waiting for that 500 or cheaper ETH, or that 10K Bitcoin or lower. And it may come later this year or next year. Obviously it's not coming today, but people are obviously extremely bearish now. It says a lot about the psychology of traders and how they love to be just extreme one way or the other. You don't have.
It's like the same way we like our Doritos, man. Extreme.
Yes.
Not extreme enough. I'm consistently disappointed.
Yeah, and actually, that makes me want to look it up. I thought I saw someone had posted some psychologists had done a study on RCC posts.
No way.
Anyone else see that? I know I saw that.
Sounds familiar.
I think I'm gonna have to dig it up if they did. It's probably an interesting case study. The combination of different types of personalities within the space, but in any case, I just love seeing those sentiment swings, and the more extreme fear really has been the best times to buy stuff. If you ever had a doubt about the fear and greed, and I know a lot of people mock it, but come on, I mean, when we were at the most extreme fear ever, if you had just gone and just dropped in enough money to buy a couple ETH, you would be up pretty nice right now.
Yeah, but the question is, and we've definitely had our blood in the streets moments here and there, but have we really hit that level yet where people are like pulling their hair out, like, I'm never touching crypto again? Like, have we already passed through that, or is that still to come?
And this is where I sometimes butt heads a little bit with some we'll call them OGs, right? A lot of OGs in the space are expecting this to have a lot of parallels to earlier cycles. But I believe with the growing adoption that you're not going to see the same kind of deep emotional capitulation that we saw before, but certainly in the charts and in the on-chain data, I personally think we've seen the capitulation. And just using like the 7, I posted this, I don't think I posted this on Reddit, but I posted it on Discord and Twitter. Looking at just the average like 7-day mean for inflows, only 3 times in the past couple cycles have we reached levels that we reached in June. 3 times, and each time represented the bottom of the bear market. Now, it's not to say that we are there this time, but there's a lot of indicators traditionally that would signal the bottom.
Yeah. I would say, like, my opinion here, like we hit those really sad times, sad moments, and came back stronger and sooner to, not back to where we were, but did some recovery more than I would have expected. So that's I don't know if that's bullish or cautious for me. I'm more of a scared trader. I'd rather wait and see,
If you're going to be in crypto long term, you got to get used to bathing in the blood. You have to get comfortable in the fear. It's something you can take a little comfort in, is that you'll always hear the same rhetoric no matter how long you're in it. Like, this time it's going to zero. This time it's dead. Like this time there's something, it's totally different. And guess what? It never is.
I've been in it long enough that I'm desensitized to the swings.
Yep.
Like, I got my buddies here that like, oh my God, it's like, nope, this is normal. Relax. It's coming back.
What about this in the government and it's, it has to feel real each time. I think that's what it is. And it never is. So there's a strength of DCA. Take the emotions out. Just make a plan.
And whoever you told to buy,
don't tell people to buy.
Last year, whoever you told to buy crypto, just don't visit them for a few months.
Yeah, maybe make new friends.
Or make new friends. Yeah, I mean, you can't do that with your mom. So if you're like me, just tell your mom you're stuck overseas on a new position, new job for a few years. She'll hopefully forget.
But we all did it. Don't feel bad out there. I mean, maybe feel bad, but just learn from your mistakes. That's what this all is, like a story of rebuilding. We've all done that, And you know what? We've all had people be mad at us, but if those people held and those people waited, well, at least in my experience, because it's been so long, they'd be up and they'd be doing great. But most of the time they don't. They listen to you on the way up and they don't on the way down.
Yeah. I've never had the bravery and the gumption to like tell people to buy or this. I'm like, I am intellectual humility to the T. I'll tell people like, no, don't do shit. You go learn. You like, don't let your wallet get ahead of your brain. You figure it out. I'm happy to answer questions, point you in the right direction, but you need to make that call for yourself.
Dude, let me tell you guys, I made the mistake. So I always like to tell the wife when I have good news about crypto. You don't often tell her the bad news, right? She doesn't want to know when stuff's down, only when it's up, right? But
yeah, true that.
I made the mistake of like, I wanted to introduce her to crypto last year. So I set up a wallet. I gave her a little bit of Crow, just because I thought crypto.com is kind of simple and easy to understand for now. And gave her some NFTs and some Crow for a while. I said, hey, just hold on to it. Don't worry about it. Don't check it every day. Because she normally just does stocks. And well, she didn't check it, like I said. But she also didn't trade it. She didn't do anything. And she looked at it, I don't know, maybe in June sometime. And she was like, so my money's down a bunch. What's wrong?
Honey.
I love you, honey. That's what first off. Love.
Yeah. Well, yeah. And then her next question was like, how's your investments doing?
Oh God.
And I was like, well, yeah. No, it was good. You know, in all the trading I did, I forgot the one golden rule, which is don't ignore your wife's crypto wallet when you're actually cashing out of positions. So I just let hers ride. I don't know what Crow's at right now, but it's probably not
10 cents, maybe.
Yeah. So anyways, lesson learned for my married friends. Be careful.
You know, a secret, you could just tell your wife what the 200 weekly moving average is at. And then like, yeah, babe, it's just always going up. Like, we're just killing it, man. Just day over day. Gosh. It's never gone down. It just goes up.
Yeah.
You have to start that from the beginning. That's part of your DCA plan is to start lying from day one so you can continue it.
I've seen those stories, I've seen those stories in a lot of places, Reddit and Twitter and wherever, and people got to break that news to the wife. Like, hey, sorry, I lost all of our money in Luna or Celsius is, all these things going on. Hey, you gotta be upfront. If you're investing in some stuff, don't be taking like your life savings, and make sure your spouse knows really. Otherwise, you're cruising for a bruise.
Oh, absolutely.
Yeah. So I'm moving into questions. You guys can chat a little bit while I skim through here.
I think we're losing Tom here.
I have another scheduled meeting here in a little bit that I have to put clothes on for because there's video.
It's been great chatting with you, man.
Yeah, dude, for sure. It's nice meeting you, my friend. I was about to say it wrong. Jared. How do you say it? Jared? Yeah, Tom. No one messes up.
I say Jared. Although wherever I'm at, because it's spelled Jarrod, it's
Jarrod.
From Gerard. So it's like
Jarrod from a mysterious country.
The country of New Hampshire. We're seceding.
Yes. Ooh, exotic.
Oh my gosh.
Yeah, guys, I'm going to check out, but thanks for having me on again. I'll be on soon, I'm sure. I had a great time as always. I love you guys.
Love you, brother.
Thanks, Tom. Always good. So going through the questions, I just got to sift through all the incredibly bizarre comments you guys and ladies post here. Wow. Yeah.
Are you in the Discord or the Reddit more? Checking the comments.
Right now I'm in Discord just looking. I see Leveler talking about how CPI is baselined over the past year for inflation. He's just saying they manipulate the data, and this is a very common accusation with all of the data that the U.S. government puts out. And not even the U.S. government. Let's be real. Every government in the world. I see the same thing when China puts stuff out, when the Eurozone puts stuff out. Every government wants to control the narrative as best as they can. So if you were to use, there's been different formulas for measuring inflation. If you were to use, say, a formula from the 90s or the 80s or the 70s, inflation is up way more than what we're saying right now, just for the record.
Yeah. Yep, and that's not surprising at all. Like, at this point, I don't keep tabs of those things. I just assume whatever they're spewing, it's probably a lot worse.
Yeah. Leveler also commented that there's price action and technical analysis that can support 10K as a possibility. I'll say that when you look, I'm a big fan of looking at the value ranges, which show kind of historical levels of activity in the market, which has a strong correlation to future bidding and activity. If we were to lose the upper teens, then yeah, the like 10 to 12K range is a distinct possibility. There's a lot of support in that range. And it's kind of like where we are now. There's not a lot of historical precedence for, between say 23K and 28K. That's kind of like in no man's land. If you remember last year when we blew through that, because I think that's the Elon, wasn't that the Elon candle?
Yeah. We were there for just a moment, and then it was. Yeah.
And when you have that kind of action, that means that the big players in the space, they want to trade off of where there's most likely going to be a predictable amount of support, resistance, whatever it may be. So predictable amount of activity. When you get those no man's land in the middle of the 20s, it's a little bit harder for them to do their thing. And so that's why we see often, like we did, what was it in June, when we finally broke to the downside and we just blew through the 20s, like all the way down to 17K. Like there's like no support, right? If you remember, there's some big old candles there.
I remember those days of tears. I had thankfully bought a piece of property with BTC before that, so it wasn't as painful. I was like, awesome. I can recover a bit.
Yeah. Speaking of, I just noticed. Yeah, thanks. MLZX just mentioned Bitcoin pumping. We're over 24K right now. At least according
that's because of this podcast. Right?
Well, we used to get accusations that we sank the price because we would do this right before the market closed, so we could talk about that. But obviously, market closes do tend to have a lot of volatility, and it wasn't favoring us, considering that we launched this podcast into a bear market.
Fair. Well, we're going to work up from the ground. We got this.
Let's see. Going through. If you see any questions, feel free to poke through the Reddit side. There's just a lot of comments that I got to sift through that don't have anything to do with crypto.
Reminder, blah blah blah.
Like people talking about turkeys.
Like I don't get the turkey questions.
Yeah, crypto tax lawyer. This has been a big one. So I'm not a shiller. So I'm not gonna say what projects I work for. I will say projects I'm excited about or I'm in, but ones I work for, I really don't want to mix with what I'm doing here. But talking about the lack of educational resources from regulators, I think it's true across the space. Now, there's a lot out there if you want to learn how to trade. There's a lot of information out there about crypto, but there's a lot less that I feel is made accessible. I mean, there's a little bit on stuff like Binance or Coinbase, but really in terms of like how to safely invest, how to not degen, it's not accessible enough to where people readily find it and trust it and adopt it. And that's why so many people get wrecked in this space. And so, like what I do is I can show this, which is every week I run a little bit of like an educational live stream. It's completely free. We're going to be talking about DeFi in the next one. And this is just going to cover the basics. And even for a lot of crypto traders, you do all your trading on Binance, on Coinbase, on whatever, on exchange, and you've never tried DeFi, or maybe you do NFTs and you've just never waded into some of these things, and you're curious about like what is a liquidity pool or what is a decentralized exchange like Uniswap, or how do they work. These are the basic things we'll go over, or even just how to set up a wallet, like a Web3 wallet like MetaMask. These fundamentals, I believe, make people a lot more competent when they understand, one, how to use the tools that they have, and two, understand the risks that come from them, from playing in the space. So, and I'm sure too, Jared, you as a member of the Tezos community, it's probably a big thing that you guys preach as well.
in terms of education.
Mm-hmm. Yeah.
So for us, we're still like our DeFi space is definitely getting established. So we're kind of behind the game on that, but we got a lot of new cool stuff coming out. So and the community is like has been waiting for these kinds of things. So they're excited to chop at the bit there. We also have a huge influx of like artists from the NFT community.
Mm-hmm.
There's a big kind of like authentic grunge feel about that. And so now, but we have artists, and so it's an interesting problem of getting them interested in like Web3 and those kinds of things you're talking about. So these are fun problems to solve. But yeah, a lot of the game is education. The way we solve that is by having a lot of accessibility in spaces. Like we're running Twitter every day.
I remember meeting with we did the AMA with the Polkadot team, and education on their part was a big thing, but that in part I think was because Polkadot as a technology is a little bit complicated, a little bit hard to understand, and so they really have to do that education. But yeah, a lot of NFT traders don't cross into the DeFi space, or a lot of DeFi guys don't cross into NFTs and so on and so forth, right?
Like I talk to creators all the time, and we're talking like kids in college, people from all backgrounds and stuff, and they don't care about blockchain. They just they want this cool new thing that frees them from the art houses and gets them into like a direct relationship with the people, buying their art and interested in their art. We also got music NFTs blowing up. I think there's more music NFTs on our chain than anything else. And so, but these people, a lot of them are kind of cool, techie, into that. But a whole lot, the majority, I would say, don't care about blockchain, and that's fine. Like at the end of the day, we're getting users, like your end users, not going to care about whether it's on a blockchain or not, or which blockchain, and so kind of insulating them from that experience.
Well, we'll eventually hit that inflection point where the average user of this technology doesn't care, doesn't even know about how it works. We're still at a point where a lot of you listening to this, a lot of traders, a lot of investors are still looking at the fundamentals, like what's the transaction per second speed, or what's the cost of gas on the chain, or what's the whatever, what's the roadmap, how active is the developers. But there'll be a point when people can just open up an app and use it and not even think about it, and that's the dream, right? That shouldn't be complicated.
Yep. And we've got some cool stuff heading in that direction. It's like we actually care about getting there, so that's the first step.
Yeah.
There's a really cool question here. Someone said, copying over from Reddit. And guys, I'm sorry, I'm a boomer on Reddit. I'm having a hard time finding the questions. If you want to drop me a link, I'll go over check it out. But he says, many crypto investors are holding their assets custodially. Can't the effective supply of supposedly hard assets like Bitcoin be easily inflated via fractional reserves if it's held custodially? Do you want to expand upon that a little bit? Because people may not be familiar with fractional reserves, Sir Poppy.
Yeah, so in fractional reserve, we're talking about, or maybe the easiest way to get that weird echo again.
Let's see, maybe that's me. I'll try to move these mics around.
Oh, you have multiple. Oh, yeah, that's right. You got the phone.
My phone, and then I've got like my condenser mic here.
Yeah, so there's actually nothing wrong with fractional reserve. This is a thing that if we step back for a moment and we talk about people are talking about bank runs in crypto, and they're talking about things like Celsius is a good example, right? They couldn't meet all of their obligations, so they had to pause withdrawals. But here's the thing: most banks in real life couldn't handle everyone showing up at once and asking for their money. This is why systems like most governments will insure banks up to a certain amount, because that gives consumers a little bit of reassurance. They don't need to rush to the bank and claim stuff if there's some big emergency incident, right? They can wait. They can let the bank handle things orderly and then withdraw their money. And what this does is this allows the banks then to reinvest the funds that they have and kind of keep funds flowing. Like that's how, if you have a small business and you get a loan from them, that may be how they're able to give you and offer you that money. Same thing applies in the crypto space. some of these now, not in all the crypto space, right? But in the centralized side, it sounds like that's how a lot of Celsius, Voyager, those guys were doing business, was that they didn't necessarily have enough actual cash on hand to meet all of the demand from the consumers. And so
yeah. So for me, I don't know if fractional reserve lending is inherently good or bad. Like, from my opinion, is it voluntary? Then sure, anyone can do what they want with their property. My opinion. Do I, at the face of it, do I like the idea of fractional reserve lending? Am I going to want to get involved in something that does that? Unless it's my only option in the market, probably not. Just personally, again, not to say that there's not good arguments to try that. I think this is an interesting case that's being made here, that you can do some kind of fractional reserve lending with Bitcoin, and I could see someone say, like, yeah, but no one will participate with that. Are you kidding me? Have you seen the kinds of decision and checks and balances people do with their money? It's what blockchain.com gave Three Arrows Capital $270 million without an audit. There's all kinds of decision making that happens. And so, yeah, if someone offers fractional reserve Bitcoin, I bet you there's going to be someone out there that's going to buy it. It personally, for me, like, is it good? Is it bad? Hell, I don't know. I'd be sketchy. I'd be reticent to use it. Now, maybe it's a why. I would want to see something existing on a smart contract. Can I audit it? Can I see the code or pay someone smart enough to check the code that says if such and such does something naughty, then their funds gets broken? Like, that's what I'd like to see in a smart contract for any of these things people are getting involved in. It's like, okay, make the CEO of Celsius lock up 50 Bitcoin in a smart contract that gets nuked if they do something untoward.
Well, that's funny you say that, because that's actually one of the things that happened. Was these centralized services had, in fact, Celsius had loans through DeFi. You remember, I believe it was them that had that big loan through MakerDAO.
Yep.
Which is one of the OGs in the DeFi space, well respected. And the thing about the blockchain that I absolutely love is it doesn't discriminate. If they couldn't meet the requirements, that loan would be liquidated and MakerDAO would, take ownership of that collateral. So
Amen.
Celsius had to. And the other beautiful thing is, a lot of DeFi, I don't know that all of it meets this standard, but the kind of typical practice that you're going to see, at least on ETH, which is where most of my experience is you're going to have over collateralization on loans. And that's also how they do stuff, for example, like self-paying loans. Something like Alchemy as a service, they will pay your loans off for you. You walk away with cash. But here's the thing, you're not going to get 100% of your cash back in a loan. It's over collateralized. They got to protect themselves. And then over time, whatever strategies they use to reinvest that money, they'll take a cut of it, of course, but they'll pay back your loan for you, which is just something you don't really see in the traditional side of finance. And this is just, we're still early in crypto, but just the idea of self-paying loans already at face value is just phenomenal. It's revolutionary even.
It's like, we've talked a lot about the negative sides of DeFi and the world we're in with this, but I'm glad you brought that up, because the upside is so much greater and so much more optimistic. There's so many creative solutions that people can come up with, and like, I have no idea what it's going to look like, what the future looks like, but I'm confident people are going to find some really, really awesome ways to offer great value and innovation. I know that sounds kind of hypey, but it's like, I don't know what it is, but I know there's going to be some really cool. And okay, so the Celsius situation is an example of that. That's demonstrated. Who got paid back? The smart contract got paid back. It wasn't the other off-chain entities.
And it wasn't retail. It wasn't us.
Yep. So who got paid back first? And that is a lesson.
It is. I already showed it once, but honestly, if anyone's interested in the DeFi space, and not just traders, like if you got a project and you're just sitting on your treasury, there's things you can do with that treasury that's fairly low risk. join my stream next week. I post about it. Like I said, it's free. You can ask questions on there as well.
What time of the week is that? Sorry, I know you mentioned that probably.
Yeah, no, I didn't. It's Wednesday. I think it's 6. Let me see. Yeah, 6 p.m. UTC on it's on YouTube. So I'll post a link into Reddit in case anyone's curious. But I say it because I'm a big proponent of education in the space. I mean, that's why I volunteer my time with RCC. I mean, I mostly spend it in Discord, but I just love empowering other people to make their lives better. You know, yeah. I enjoy it, and also just enjoy BSing with folks. So RMP 2019 was asking about Ethereum's proof of stake in the merge. So that's going to be coming on September 19th, I believe was the last date I saw, somewhere around there. So we'll assume third week of September it's going to hit. And then they're asking, you know, what are folks going to mine when it goes to proof of stake? So if you're mining just to make a profit and you're doing it not because you believe in the tech or you believe in the protocol chain, whatever, there's resources out there. There's websites out there that can tell you what the most profitable mining chains are. And I saw them mention Ravencoin. I think that's one I've seen. I don't know where the demand for Ravencoin comes from because I know it's been around for a while, but
oh gosh, do you want a tangent? I can tell you about Ravencoin.
Sure, yeah. Let's hear a little bit about it.
So I've always followed Bruce Fenton, and because he's someone who was in the stock. He was on Wall Street for like 20 years, but he's also been big into crypto. He was on the Bitcoin Foundation and just been a really cool Liberty guy. And now he's like, you know, in New Hampshire, and he's running for Senate and really like pushing positive crypto stuff. But Ravencoin was a project he was heavily involved in, like at least a co-founder, if not the founder. And the value proposition behind that was it was an ASIC resistant proof of work chain, which would have like tokens aside as tokens on top of that. You know, these tokens, you could use them for IPFS links. You could use them as basically what he wanted to see was a replacement for stocks, essentially. Like these tokens on chain, you can create those and send them around, blah, blah, blah. So it's basically proof of work that's meant to be like a token, like standard. And, you know, so yeah, when I saw this coming out, and this was still roughly in the days of like new projects and number go up, although it was at the tail end of that. So I hopped in there and, you know, got some Ravencoin, got some stuff. But in the years since, and yeah, it's been years, it's kind of just middling, you know, performance. So that's my history with Ravencoin. Seems like a cool project. You know, I like the idea of like I'm not proof of work, proof of stake, maxi either way. You know, I like all the options to be out there because I don't know what's going to work best in the future.
Yeah, I agree. As long as they have an as energy efficient solution as possible, then I'm supportive of proof of work, and I think in most cases it's an incentive to do so anyway. So, but yeah,
I'll save that tangent for the future because like I know I'm down with the arguments that proof of work is the better you know, or can't, not saying it is, but there's arguments to show proof of work is just fine and actually a very positive thing energy efficiency wise. And on top of that, like there's nothing more energy destructive and non-efficient than fiat, in my opinion.
Yeah, we could bring that up in the next one. I'm definitely interested. Is it time to FOMO? I saw some really funny comments about this today. Basically saying you're sitting at that point where you're kind of panicked and you're wondering, man, should I buy in? Should I buy, or is it too late? And no one's going to have an answer for you. This is why we were preaching DCA for months. That said, it's not too late to DCA in still. If you're not sure, then just keep doing that. Yeah. And heck, if you're feeling brave, I mean, go ahead and ape in. It's not financial advice. I'm not telling you to do it. But if it's money that you can afford to lose and you're willing to take on a higher risk profile here with your investment, then shoot. I mean, look for high time frame, swing low and just ape in. But that may end up biting you in the butt. So.
See, for me, like if I feel like if it comes from a feeling place, like I've got to go in or I've got to get out, that's a red flag for me to like just detach from it. and not because I'm not thinking right. I'm feeling about it. That's just personally like my style with it.
I personally always want to plan. So I look at the charts, and I posted this up. My expectation is that we're going to at least try to retest that bull market support band at 20 and 21 week moving average, which just cleanly aligns with the resistance level extending from November, which is when markets started to tank. I just feel like it's inevitable. Maybe call it just years of trading, call it, me doing some analysis on the chart, call it whatever you want. And it's right there where the next value range is, in the upper 20s into around 30K. I could be wrong, but me personally, I'm trading as if that's what's going to happen. So that's my plan. I have invalidation points in that plan, and that's what you should do. Yeah.
See, I was just thinking today, like the other way. I'm like, man, should I drop one? And, just in case we do see the 10 or the 8. So it's like, and we've been around so long doing this, and we're looking at different perspectives. Like that's the way it is.
Yeah. I guess we'll see. Maybe at the end of the year, we can compare notes and see how we did.
Oh God. That'd be fun.
Let's see. Yeah. So basically the lesson on FOMO is just go in with a plan if you can, but if you really feel like you're going to FOMO, I mean, it's all on you. There's always risk in FOMOing. You're talking about Pi Network.
The safest thing you can do, in my opinion, is start taking notes. I know I say this every podcast. Like, if you want to know a plan, it's actually start coming up with one and write down what your goal is, write down what you did, and then write down what happened. If you're not writing it down, you're just screwing around, and then you're gambling. If you want to not gamble, have a plan, write it down, revisit it.
Yeah, you know what? That's no joke. I keep minimal notes because I'm just not actively trading. I consider myself more of an investor these days. So I'm not, I don't really need to sit there all day and look at stuff. But active traders, I've seen it. A lot of these guys will keep every single trade they take. If the trade goes south, if it goes poorly, they even put notes in there about what they did wrong. Like, hey, I FOMO chased a candle, or I panicked and hit the whatever button, right? I mean, you got to be honest with yourself if you're going to make it in this space. And everyone screws up sometimes, make sure you're honest with yourself about why you're doing stuff. So JDog4089 is asking about Pi Network. On one hand, I've heard that the founders of Pi Network are potentially legit. On the other hand, there's a lot of accusations of it being a Ponzi, a scam, a whatever. I'm leaning towards the camp of I'm not interested in it. I haven't looked too much deeper into it because it's surface level. If I see, if I search something on Google and like 3/4 of the top articles are about how it's a scam, I'm just going to assume it's a scam. Even if it's not worth the risk for me. No offense, Pi Network, if you want to come do an AMA or something and we can talk about it and you can try and convince me otherwise. But that's my advice. You should always be searching these projects, especially if they're not like a top 20, top 30 project. Then you really want to do some research first.
And I would absolutely, I know this, I would take this for granted as like common sense, but not a lot of people practice it. And look at the people behind the project. A lot of times that can shine some red flags. Look up Better Business Bureau stuff. Look at do some Google searching, find their name, look at their business history. And I'll find them in the future, but there's some resources for people that have launched LLCs and things like that, and their names attached to that. And you can find so this guy has 10 failed businesses or a lot of these things. It's that can really inform your decision, and it really should. If you're going to be investing any appreciable amount of value into these things, just do a quick Google search on the people around it. And if they're anonymous, take that, not to say that there's anything wrong with that, but take that into account and let that be part of informing your decision.
Yeah, agreed. Someone made a comment about SafeMoon mining. I've heard nothing about that. It wouldn't make any sense to me either, but if someone can send me an article or you can post an article about that, please do. I'm very curious. I've seen some interesting spins on mining. For example, there was last year there was a CryptoPunk derivative. It was like Mine Punks or something like that, and they had an app where you had to mine. Now they're still on Ethereum on Ethereum chain, so there the idea of mining a specific NFT already on a chain, it was kind of a weird idea. But anyways, I've seen some stuff like that. I'd be interested to know what SafeMoon is doing. I'm not a fan of them, but curious.
So I've seen so I administrate some crypto communities, and you always see these different projects that just have spammers that show up and defecate their spam across all your channels and stuff. And so like a lot of these projects I have negative associations with, because I'm like, oh, so you're the one that paid somebody to show up in my Discord or Telegram channel and just spam the place. Good to know.
Mm-hmm. Yeah, it might just be spam. I don't know. Too many serious investors playing with SafeMoon right now.
When it's like if that's kind of the way you've got to get your word out there, then I'm super skeptical, because otherwise a good project kind of can speak for itself and go through like normal marketing measures, respectful marketing.
Yeah. So let's answer just a couple more and then we can wrap it up. One is, I'm new to crypto. I invested in XRP as it's the quickest way to make a few bucks. I don't know who told you that, but XRP's basically their entire value proposition at this point is winning a court case against the US government. I think there's going to be a real kind of resistance to big upside moves until that's resolved. And for that reason, I won't touch it. I do want to see that court case resolved, positively for the crypto space. And so in that regard, I support them. But, me personally, I'm not interested in XRP, and I don't think it's the quickest way to make a few bucks.
XRP is one of those interesting coins. It is really unlike a lot of other projects in its approach and in its current legal situation. So I would, yeah, and I'm with you. Like if they win that case, hey, maybe that's a good thing for them. But who knows? And good Lord, we know like the legal system is not predictable or reliable. So we'll see which way that goes. Like you said, you are kind of dependent on the outcome of that.
Mm-hmm. Yeah. Thoughts on crypto.com is the next question from a large dragon. My thoughts, I've talked about this a little bit before, but you remember a few months back when everyone was so upset that crypto.com was rolling back some of their rewards. I mean, it was like head on fire, people, riots in the streets. But now you see what happened with how many exchanges, like a dozen exchanges are now defunct. Massive hedge funds, collapsed. I respect that. Now maybe they could have done the press release a little bit cleaner, but I respect that crypto.com is being sensitive to the fact that they need to have sustainable yield on their products. If they didn't and they were risking the collapse of their entire exchange and business, then I wouldn't have any respect for them. I certainly wouldn't be using them. So it sucks that they're rolling back rewards, but I mean, if they're doing so, it's for the health of the market, I'm sure.
Well, what they're acknowledging is that they were paying too much for themselves for what they could sustain. I was noticing that with blockchain.com. I was getting interest on Bitcoin and USDC with them for a while. Like they were offering like 13.5% on USDC and like initially 5%, I think, on Bitcoin. And I would notice like every 6 months or so, things would get pulled back a bit. And I was just like, okay, so basically I'm going to take the time to get set up for this infrastructure, and over the long enough time period, it's going to go back to something middling. I'm not too excited about to take the risk.
Yeah. And I saw the same thing. I used BlockFi for a while, and I saw the same thing. They'd adjust rates all the time based on market conditions. And at the end of the day, if you're using a centralized corporate service, they need to make profit. I mean, that's their sole purpose, right? Of course, they're providing a service and you're going to get paid too, but they're going to take a little bit more of a cut perhaps than if you use DeFi. But then with DeFi, I mean, there's some other risks in DeFi that aren't present with the centralized exchange. So you really got to pick your poison. There's no single right answer. There's just degrees of like value and risk that you need to weigh. But I do think that, I mean, there's, other than maybe handling their press releases better, or maybe not spending $1 billion on naming a stadium, functionally, I don't think there's anything bad about Crypto.com. And I, full disclosure, I have a few NFTs. I think I cashed out all my Crow months ago, but I guess the wife has a small bag, very small now.
I personally never looked too much into Crypto.com. I'll have to check that out.
Yeah, I like the Kronos chain. I use the Kronos chain. I do think it has some pretty decent dApps, and I like a few of the NFT projects. But I mean, I'm still primarily in terms of smart contracts, I'm still kind of an ETH maxi, I guess.
Okay.
Except for, I'll give respect to your Tezos, sir. I love the art community there, hands down.
Thank you.
I've said it before and I'll say it again. Like, the most authentic art community is on Tezos. Not the most profitable, but definitely the most real. Like, real artists hang out in Tezos.
Yeah, that's what I was thinking. We were talking about like community and education and solving those problems. That's actually one area that helps so freaking much. Is we've got a lot of genuine community, and so new people show up, and there's everyone around helpful and really nice and trying to help them out, because they're not just hanging around for like number go up. They're building and they're doing cool shit.
Yeah. Let's make this the final question, and then we'll wrap things up. This has been great. This is from CDN Kevin. He's asking, and this is like a really big, broad question, which I think we've really hit a bunch of these already anyways, but do the speakers think that another drop is coming, because of the recession, FUD, Coinbase, Voyager, Celsius, court stuff? No one's going to have an answer. If someone tells you they know the answer for sure, then stop listening to those people, right? But yes. You can have a measure of kind of an educated response. You can look at the data and build a response on that. I mean, there's a lot of different ways to look at this. I just look at it in terms of, we'll say the most fundamental measures within the space for on-chain data. You're looking at the inflows, the outflows, and then the supply that's on the exchanges and or volume. And looking at those, for me personally, I feel like we hit peak capitulation for this cycle. Now we can still see a downtrend, and we can still see a prolonged downtrend. But in terms of these big, scary, like, 2 or 3 day events where it just drops like 40%, I personally, don't think in the near term that there's a catalyst for that right now. That could change, but for the next month or so, this is me, not financial advice. I think we've shaken most of that. That 17K, that blast to 17K, it was a major test to the ecosystem, to the market, and a lot of big players lost that test. And I think we have time. If there's a deeper drop, in my opinion, I think we have time to plan for it. People will see it coming.
I'm of the same page. If we do get to those lows, if we do get that like 10 or 8K Bitcoin, I think we're going to watch that, and it's going to be a slow march, in my opinion.
Mm-hmm. Yeah. It takes, you can't underestimate the amount of capital it takes to see massive candles like that. It takes a lot. And once you hit that capitulation, it's a lot of people have left the space. A lot of money's left. A lot of, and
a lot of the volatile and like messed up situations have already been crushed. Like, can you think of anything out there in the space that's, oh gosh, man, we're at the end of the show. I'm gonna open up a whole nother can of worms. I'm gonna save that for the next show. Tune in next week.
Yeah, there's certainly things that could happen that would make those kind of candles, but I just don't see anything obvious right now. The nearest kind of FUD we had for that was Mt. Gox, but since those folks have an option to receive their payment in US dollars, I don't know why they would bother to take it in Bitcoin and then try to sell the Bitcoin, all at once anyways. So
that's totally fair.
Mm-hmm. Yeah. Well, I think with that, there's probably some other questions, and we'll try to get some we could always write up and answer, chat. But it's been great. All of you, I love the participation. Love the Q&A. And Jared, it's been a lot of fun having you on. Hope you'll keep joining us. Everyone, have a safe weekend. Enjoy the bit of a pump we have.
My pleasure. Thanks, Poppy.
Yep. Have a good one.
Hey, thank you to the community. Appreciate it.